What's going on, guys? Can you let me know if you can all hear me? If you can all hear my voice? Good to have you all in the chat. Can you guys hear me? Can you hear me fine? Okay, perfect. I'll just let the room fill up a little bit more before we get going. But yeah, good to have you all in here. So I just set up a couple of things, guys. Okay, cool. I think we're all sort of set and we're all ready to go. So I just wait for a few more people to come into the room and fill up a little bit more. I can't hear you properly. Sing a song. What do you want, a Christmas song? Love the wallpaper. Yeah, we've got that sniper in the background. The office is a little bit unfinished at the moment, guys. I'm going to show you a little bit more about the office. The lighting isn't great in here today because we had that blackout that I told you about in the group. I thought, bloody hell, you guys aren't going to believe me if the blackout, if the power didn't come back on, but the power came back on, so we're all good. Okay, so I think we'll get started, guys. If my voice is low, let me know. Hopefully you can all hear me. Someone said it's you. Okay, guys, so what I want to do today is basically talk about the Fibonacci webinar. Did you guys like it? First off, hopefully you did. But what I want to do is talk about the Fibonacci webinar. So today I want to basically mainly talk about that. So what I'll do is I'll start off with telling you a little bit about what I've been talking about on the evening calls and Sniper Sundays and so on. So basically, guys, what I've got in store for us coming up, I'm thinking of all new ways that I'm going to improve the community. I'm always looking at how I can give you guys more. And so basically, what we're going to be doing from next year is every Monday. So Monday, we know that the market can be quiet. It can be a little bit quiet, not really much going on. But how we're having a live stream today, the new feature that I'm going to add is basically called Monday Meetups. So what we're going to be doing every single Monday is jumping on a live like this and talking about a specific topic. So we can all learn, ask as many questions, and talk about a specific topic in detail, and basically just have a community meetup every single Monday. So every Monday evening, we'll sit down, grab a cup of coffee, sit down at the computer, catch up with each other. You guys ask me any of your questions, I'll answer them. And as I said, we'll try and keep it specific. So we can talk about psychology on one Monday, different parts of psychology. As we know, there's a huge umbrella to that. We can talk about price action, Fibonacci. We can talk about all sorts. So every Monday, what we're going to do is have a community meetup where we all sit down together and basically catch up. And it doesn't even have to talk about purely trading. We can talk about other stuff. But basically, it's a way of me and you sitting down, and the rest of the community all sitting down, talking to each other, and basically talking about anything and anything to do with trading. And we can even talk about things untrading related if you wish. Does that sound good to you guys? Does that sound like a good new feature? I'm just looking through some of the comments at the moment. Okay, good. It's nice to see the feedback. So, guys, a lot of the time as well is remember as much feedback from you guys as possible is good. So, even on the morning or evening calls, sometimes if you like something specific that I said in the evening or morning call or the Sniper Sundays, something that you like more than others, leave a comment on the YouTube because I can see that. Remember, it's just us that can see that. So, leave a comment and then I'll be able to see what you like more of and so on and try and include more. But yeah, every day, every Monday at 7 p.m., I'm thinking, guys, I think it's just a really nice way for myself just to sit down. And it's literally, I want to create that community vibe where we just sit down, everybody grabs a cup of coffee or whatever it may be. We sit down, have an hour where we chill out with each other and just talk about whatever you guys want to talk about. I can see your comments coming in. I'll answer your questions. Today, I want to talk about the Fibonacci and answer questions on that. So, sort of the Monday meetup, the new feature hasn't started yet, but I'm going to be introducing that. Basically, I want to do that from the first week of the new year. So, the first Monday is January the 6th. However, we do have some time between now and then that I'm going to do some more of these live streams. So, it's just a bit tricky because we've got Christmas coming up. So some days might be tricky for you guys. So what we might do is just see how Christmas goes. But we'll definitely have a couple of live streams between now and when the Monday meetups start. But once the Monday meetups start on the first Monday of January, it'll be every Monday from then onwards. Yeah, every single video that will be done, every live stream, every Monday meetup will be recorded and saved because I think there'll be tons and tons of value for you guys. I think sitting down and me answering your questions is going to be great. I'm going to be able to answer in detail, explain things in great detail. So I think it's going to be a huge educational and a huge learning curve, which is one of the reasons why I've done it. As I said, when there's quiet times in the market, I want to be able to give you guys something. So on a Monday, if it's a quiet day in the market, Monday, Tuesday, how we've seen that Monday, Tuesdays, Wednesdays have been quiet recently in the market, we can have that extra education or something to learn from, or just a way for us to all to get together on a Monday afternoon or Monday evening and have a community meetup. So there's some questions that I'll answer here. I'll go through some questions here. I do want to talk about Fibonacci just to round that off. Hopefully you liked the webinar. I'll come back to that. So the next BD Forex event, guys, someone's just asked, is again, I need your feedback. At the community event in London, we had a really, really good day. The guys from London, if there's anyone in here who was at the event, will tell you how great the day was. And then we all had some drinks, we all had some food, we had some drinks at the bar afterwards, and we discussed where the next one could be. So I do have a good idea where it might be, and it'll be a place where lots of people could come. So it's kind of central. I don't want to say too much because I haven't decided 100%. But when I ask you guys to comment on stuff, it's because I need your feedback. I want to see where the demand is, where you guys want us to come, or what you want. So yeah, the next one is going to be fairly soon. It's going to be early next year. So yeah, we'll definitely be looking forward to meeting you guys because the meetup was great. I'm not just saying it. The guys in the group will also say the same. If there's anyone in the chat room now, I'm sure they'll come out and say how good it was. So yeah, you saw the live video that we done yesterday as well, which is really good. Portugal, we've been there. We'll be there next year. Amsterdam, it seems to be a very, very popular. Seems to be a very, very popular destination. Seems to be a lot of people from Amsterdam or local to Amsterdam, and there's a lot of Europeans, so Amsterdam could be a good shout. And yeah, we might be able to make a holiday out of it, guys. Rather than just a meet up, we could possibly have a 1 or 2 day event. Thank you, Matthew. Just saying that the London event was amazing. very beneficial. So I think a lot of people took a lot out of that. And that's kind of one of the things that made me want to do these webinars or live streams on a weekly basis. I think me explaining things face to face and really breaking things down really hit home, and people really liked it. Um, so this feature I think is great. Personally, I think this feature for you guys is great, for especially additional put on top of what we're already offering, to then have this Monday meetup every Monday. It's just nice to sit down and all talk to each other. Okay, guys, so do you want to go over the Fibonacci? I said I want to round that off, and I put out the Fibonacci video. Hopefully you guys like that. Let me know your feedback on that. Hopefully you guys like the Fibonacci video, and what we can do is just round that off and close it off by answering some questions now that you guys have. We can couple this with the Fibonacci webinar and pin it to the group, so that if you watch the Fibonacci, you can then come and watch this and answer the questions. Thanks for the feedback, guys. You're saying that the new feature is great, so I'm looking forward to getting that started. VIP camp for training. All these ideas can happen, guys. I just need to have your feedback. But first, let's get to let's just concentrate on the Fibonacci, and then we'll answer all the other questions afterwards. So come at me with all your Fibonacci questions, and I'll answer those now. And then at the end of this, we'll come to all the other stuff, and we'll talk about the next event and any other questions. So guys, I'm just going to look for Fibonacci questions next. There's some other questions coming through, but let me just answer just the Fibonacci questions first. Is C the new A even when you took profit at D2? Yes. So with Fibonacci, whenever the Fibonacci is complete and you have A, B, C, and then you complete it by hitting D, the C becomes the new A. So that the C becomes the new point, the top of the Fibonacci. I'm going to jump on the chart in a minute and go over some more stuff as well. Does the diagonal line on Fibonacci matter? I think that you mean the diagonal line that comes up. No, do not use that. That doesn't matter. That just comes up with the Fibonacci. I don't pay attention to that. I don't think anybody does, but I certainly don't use it and never have. Okay, someone said, can I do top down on how I apply fib, then zoom down into my trigger chart? So I'll do that in a minute. We can have an example and see if I'm answering what you mean. How do you know about the market manipulation? We'll have a look at that in a minute. Is 61 level always the entry? No. This is where Fibonacci is sort of the last layer of confluence. So 61 is the best entry because the stop loss is smaller, above the 78%, and your profit is bigger. But as I'm going to show you some examples in a minute, it's not always the entry. You can have good entries on the 38 and the 50, but I do explain it in the Fibonacci video. Some said you don't use Fibonacci on the lower time frames, but I saw it on a 30-minute chart today. Yeah, I look at it sometimes. I throw it on as a sort of, again, it's an extra confluence. I never trade just off the Fibonacci. The reason I say I don't use it on the lower time frames is because it's too weak. Like everything else, everything's stronger on the higher time frames. So Candlesticks are stronger, stop loss and resistance are stronger, trend lines are stronger. Fibonacci is stronger on the higher time frames as well. So when you go down to the lower time frames like 30-minute, 15-minute, the Fibonacci sequence is too unreliable. So I don't really use it. If I'm looking at a trade and I see on the 15-minute that we've got an evening star formation and so on, and there's 3 or 4 other confluences, I will add it. But it's just as an extra confluence. I wouldn't ever take a trade based off Fibonacci on a lower time frame. So this is where it's tricky. Someone said, do you still put your stop loss above the 78% when taking a trade from the 38? Now, as a swing trader, you should. If you're looking for a swing trade for hundreds and hundreds of pips, you should have your stop loss above the 78. That's why you want to be patient and wait for price to come up higher and try and hit the 50% or the 61.8. But that's why we have to wait for a bit more confirmation. If we see some confirmation where we have, say, an evening star formation, which I'll show you that we saw today on NZD JPY, and price drops down, that's why we want to move our stop loss to break even, because price could just keep dropping, but we do know that price still has a chance to go up higher and maybe tap the 50 or the 78 or the 61.8. So we want to have our stop loss at break even. How do you decide between D1 and D2 in profit taking? Well, like we always do, we never take all of our profit. So what we do is, when we're taking some profit, when we hit D1, never be greedy. So we've hit your second target. So your first target is usually B. So we come back down and retest the former support. Then we come down and hit D1. So you want to take about another bit of percentage off. So if you've already taken, say, 25% at B, you want to take another 25% at D1, and then you can take the rest of the profit at D2. But then it's up to your discretion. As you get better at trading, you can judge the prices and you can decide whether, if price is crashing down and crashes through the B support and comes down to D1, maybe you don't want to take any profit. Maybe you want to continue lower. But really, you should have a set of rules that you stick by, and so that you take profit at the same time all the time. Yes, I use Fibonacci on monthly and weekly because the higher the time frame, the stronger. But if you're using Fibonacci on the monthly or the weekly and prices retrace up to the 61.8, you have to then zoom down to the daily and 4-hour and 1 hour to look for the direction to change and the entry. If you see that price has just come up on the weekly and tapped to 61.8%, it's not likely going to move away straight away. You're going to have to zoom into the lower time frames and expect that, obviously, as it's come up on a weekly, it's going to take a while for it to then push off. Someone said they're going to use the 1% rule and no longer going to over leverage. That makes me very, very happy. Something we spoke about at length at the event, and I think everyone realized how important it is to not over leverage. Does Fib work better in an up or down trend, or does direction not affect? It doesn't matter. Fib works the same up and down. There's no difference. Is 88.6 not valid? Different people have different levels. Personally, the levels that I showed you are the levels that I use. I've been using them for years. The 78.6%, if we close above that, I don't want to take a trade. If we spike up to the 78% and possibly spike even higher, but the candlestick closes below 78, 0.6, then I'm happy to still take the trade. Someone said, would you say that when price action gets to the 61.8% on the 4-hour, like NZD JPY today, it's best to wait for candlestick formations alone, or both market formation and candlesticks? Now, one of the things that you need to use, which we spoke about before, and I can probably even do a webinar or try to do a webinar on it, but it's hard because you have to do the webinar as things are happening. But one of the main things in trading that a lot of people fail to sort of understand is that when you're looking at taking a trade, you have to look at various pairs. So if we're looking at taking a trade on NZD, the New Zealand dollar, there's no point looking at just NZD JPY. You need to look at NZD USD, NZD CAD. You need to look at various New Zealand dollar pairs. But then also you need to look at how the Japanese yen is playing out against different pairs. Now, today when we had the Fibonacci retracement, one of the reasons and one of the main reasons for ever getting into a trade is seeing how the currency that you're trading is playing out against other currencies. So for instance, we've got NZD JPY that we're looking at taking a trade on. At the time when we had the retracement to the 61.8%, the New Zealand dollar, US dollar was falling. New Zealand dollar CAD was falling. So that gives me an indication that the New Zealand dollar is getting weak. Then at the exact same time, GBP JPY was pushing down and USD JPY was pushing down. Give me an indication that the Japanese yen is also getting stronger. So at that point, we saw that the NZD JPY dropped off about 10 pips or so, but then the momentum came out of the market and we pushed back up. But when you're looking at the price coming back up to the 61.8%, yes, you do want to wait for candlestick formations. You can't take a trade just off price hitting one of those levels. You have to wait for confirmation. Always remember that Fibonacci is the last layer to add on top. You don't trade off Fibonacci. It's the icing on the cake. So once you've seen a setup, once you've seen price action, once you've seen all this other confluences, you then throw the Fibonacci on top, layer it on to see if it works. If it does work, it's an extra confluence and gives you that extra confidence to take a trade. Do you have a plan for 2020 to grow BDFX? Yes, there's a massive plan for BDFX. So you guys are you're in for a lot. As I said, one new feature that we just added, which is basically just a drop in the ocean, which is adding the feature of Monday meetups. I think that's a massive feature and it's going to be a great feature to do this every single Monday. But next year, what we've got in plan for you guys, there's so much going on behind the scenes. So you're going to be sort of, I don't like saying too much. I like doing things behind the scenes and then showing you guys, but I can sort of guarantee that you're going to be, you're going to be impressed when next year. Is there any more questions on Fibonacci, guys? And then we can move on. Do you want me to quickly look at a few charts with the Fibonacci? I don't think there's too much more I can really show you. I think I'm answering the questions. Am I making myself clear with the answers that I'm giving you to your questions? Give me your feedback. Yes, sometimes your stop loss above the 20 to 25 pips above the 78% can be above 0.8. if you're using it on a smaller time frame. What pairs do you cross-reference? So there's various ones. I can put a list together. Again, that might be another webinar that we can speak about. So what? There's lots. There's USD CAD, that confluence that we cross-reference with Aussie dollar. There is oil that correlates with Canadian dollar. Do you ever look for a reversal trade on the extension level for a counter trend? Not really. I don't use that. That's a good place to come out as an exit trade, to take a profit. Sometimes you do see a spike backwards, but often you can see price continue down lower. Really, what you want to do is, again, at D1 or D2, just like anywhere else or any other level of support, you want to see price actually form or develop and shows that it's going to reverse. So you want to see like an inverse head and shoulders on the lower time frames. You want to see a bullish engulfing or a shooting star. I wouldn't take a trade just off because price hit D1 or D2. Someone said, any advice on backtesting? Backtesting is backtesting, guys. The stuff that you've been taught, that you see on the webinars, I go back and backtest a little bit to show you some stuff on the webinars. Over Christmas and when you've got your spare time, have a clean chart, go back in time, put on your support resistance, use what you've been taught, see how it works. The more and more and more you do something, the more it's going to stick in your mind. So if you backtest and look at previous data, previous historical charts, and see that the stuff that I'm teaching you works again and again and again, it's going to give you more confidence to do it in the future. Also, it's the more you see something, the more it's in your mind. It's like when you start out trading, I always say to print out a lot of stuff and stick it up, stick it above your monitor or above your screen. So, for instance, the early days, you look at things like head and shoulders formations, double tops, all the formations and all the patterns. But even as a trader that's been doing it for years, having things in front of you, having pairs that correlate printed out and in front of you, printed up in front of you. If you're looking at something every day, it's going to stick in your mind, so then you know it off by heart. Does the news ever respect Fibonacci levels and retracement? Again, it's a funny one because the news at times it depends what news. At sometimes the news cannot respect anything, like we saw with the pound last week. In hindsight, the charts do work. We can see that that technical analysis works time and time and time again. So yes, Fibonacci is respected, but if I would say Fibonacci extensions and stuff can be respected on the daily time frames and the weekly. So you might see that we've seen a big move. Just for instance, you could say that big move on the pound, on GBP USD, that might have been a Fibonacci extension. But on the lower time frames, if you're looking at 4 hour or 1 hour and you're waiting for some news to come out, then I would say no, prices are going to blow through those levels. So I wouldn't really take them into consideration too much. What gives me the most result? Support and resistance, trend line, price action, or Fibonacci? It's more or less in that order that you just asked. Support and resistance is first. This is how we done the webinars and why we done it in that sequence. Support and resistance first. Trend lines. I think you guys can now see from trading with me how important trend lines are. They're so important. So trend line second, price action, third, and purely because you need price action to combine with support and resistance and trend line to then take a trade. Price action by itself is no good. Price action has to be combined with a support and resistance and a trend line at least. Then it means that price is rejecting a support or resistance level, and not just in thin air, which we went over in the price action strategies before. Considering Fibonacci is so weirdly used without discretion, isn't it the easiest way for market makers to manipulate price? Yes, that's true. That can be. As I said, I like Fibonacci. I think it's amazing at how it works, but I don't trade off it. It's always just a final layer on top of the cake to make sure that everything lines up. It also helps you understand if a move has finished. So if you're looking at taking a short trade, you can put Fibonacci on the previous long trade, see if the move's finished. It might show you that, hold on, this bullish move might have a little bit higher to come up to complete, and then from there we might start a new downtrend. Do I use any indicators at all? No. What you see on the chart is how I trade. Years and years ago, I went through all the rubbish that you find. I've been trading for 12 years now, guys. So the early days, I used to use different things. Even EMAs and MAs are pretty useless. They're okay for once you're in a trade, but they can be very contradicting and can basically put you off. Indicators are there to confuse you. The more you have on your chart, the more confusion you're going to get, and it contradicts yourself. You could be in a trade and an MA will tell you to get out because the price has crossed the MA, but then price will then just drop back below and continue. But then you could have got out of that trade because the EMA or MA might have told you so. So I do not use any indicators. I think you can see the power of support, resistance, trend lines, price action, and now Fibonacci on top. Someone asked me why don't I use moving averages. I hope that just answered it there as well. Going into 2020, do you advise taking intraday trades such as longs from the neckline into swing trade regions? Yes, I do, Matthew, that is. Yes, I do. I was actually looking at some of those today. From Sniper Sundays, I think you can see there was about 3-4 trades that I was looking at taking, but the market opened up and started moving straight away, and didn't give us a chance to get the entry. But I was doing the same. I was looking at taking the long trade up before the swing down. NZD JPY looks like it's made that move up before the swing down now. How do you treat fundamentals and how do you add them into your technical analysis? Sometimes it's contradictory with the graph. What is quite amazing, guys, is fundamentals is a massive part of trading. And I've said this before, and I spoke about this at the event. I find it amazing that people disregard the fundamentals. But with what I'm teaching you, once you start seeing this again and again, sorry, I'm just reading. Sorry, I got lost. I was just reading the comments. I forgot what I was saying. So yeah, once you start seeing the technicals play out first, and then the fundamentals give it the boost. So for instance, a lot of the time, we'll see that the price is coming down, and it'll start to bottom out. Then all the signs that I sort of teach, we start to see at the bottom, like an inverse head and shoulders, a bullish engulfing, or we see the price action first, and then we might have a move, and then there'll be news coming out or something like that, and then the news is the trigger. The news is the catalyst to get it moving. So at the top or bottom of trends, when you find at the bottom or the top, often there's big news coming out, or there's something happening that will make it change direction. The market needs fundamentals to make it change direction. So that makes sense. The market's not going to just find a bottom and because we found support, it's then going to start moving back up. It needs a reason to do that. So price will come down, consolidate for a little while, and then that's why I always look at the news coming out the week ahead, all the time, or always look at the fundamentals coming ahead, because then you know that what price action is going to try and do a few days beforehand. So you can watch price action. It might have found a support, and we can watch the signs. If the signs are there, often we see that the move can happen a little bit a few days before the fundamentals, which is why we look out for it, because we can get into a position, have stop loss at break even, then the news will come out and then take that pair back off to the upside. So it's using it along with your trading, but fundamentals is a massive part of trading and you need to learn it. Someone said non-farm payroll is usually a massive move by over 100 pips. Yeah, it's been a bit unfortunate, guys, this year. I think a lot of you guys will have seen, especially people who have been trading longer, that the last 3-4 months have not been good for trading. It's just not been as good as previous months at the start of the community or even the start of the year. There's been so much going on, so much uncertainty. There's been the US trade war and the US-China trade war. There's been Brexit, and there's been things happening in Europe. So the market just doesn't know where to go, and it's just been sort of choppy. I'm so sick of saying the word that the sentence, we've had a choppy day. It annoys me every time I have to get on an evening call and say, hey guys, it's been a choppy day. It annoys the hell out of me, but we have to sort of take what the market gives us. There's some people that are not having good trading quarters or good months because the market just isn't doing well. But it looks like now, coming into next year, that things are changing. We're seeing Brexit. We're seeing US-China trade war is nearly agreed. So we should start seeing big moves again next year. January, February are good times to trade as we get into January. A couple of years ago, January was my best trading month ever. So yeah, I'm looking forward to next year and getting the choppiness out of this year out of the way. Guys, I will never talk about anybody else on Instagram or mention anybody. So I prefer if you don't ask about anyone within the chat. Is it possible to trade when there's a recession? Some of the richest people or richest traders in the world traded when there was a recession. The market goes up or down. For us, we're betting on the price. We're not purchasing the currency. So we bet on the price going up or we bet on the price going down. That's essentially what we're doing. So we can make money in a recession or not. That's the one great thing about trading, is that if everything else goes quiet, housing market goes quiet, we can still sit at our screen and make money as the market goes up or down. I'm glad that people are saying thank you for teaching patience. Guys, I've said it many times and I'll say it again. Patience is the #1 key to trading. We spoke about at the event, I said that when you're looking at taking a trade, try this out, practice this on your next couple of trades or over Christmas or in the new year. Next time you think about taking a trade, don't take it. Have patience and see what happens. Don't worry about missing the trade. If you miss a trade, it doesn't matter. You have to have the mindset that you don't care if you miss a trade. But next time you see a trade, don't take it. Have patience. And then a few hours later or a day later, when you think, right, now price is in a better position, I'm going to take this trade, don't take it. Have more patience. And then see what happens. And just see if the price goes into a better position for you to take a trade or not. I guarantee 9 times out of 10, it will. So just have more patience and don't rush into a trade. And then worst case, even if the trade does, say if you're looking for a short and the trade does drop down, it has to retrace anyway with the Fibonacci retracement to make a lower high to then take the trade. So there's no rush with trading, but everybody wants to rush, take a short trade or a long trade, try and get in before everybody else, or try and get in before the market's shown you the right signs to take that long or short trade. So yeah, patience, guys. Thank you, Kels. Do you adjust the higher high, higher low, lower low, or lower high if the wick is above? Um, yes. So we have a lower high and we have a lower low. We have a lower high. Well, no, I don't really change it. If it only wicks against the previous lower high and doesn't break above, I'll just keep that support level or that resistance level there because it just shows that it can't break that last lower high. So I'd keep that there, let it stay there, and I would only move that if the price broke above it. But then that means that the trend has changed. I could teach about property, but I don't think everyone's interested in that in the group. But I'm going to do some YouTube stuff hopefully in the future. In the UK, it's winter, and um, the economy's been a bit slow. Housing economy's been a bit slow because of Brexit. No one knows what's happening, but now it looks like we know what's going to happen. That we're going to leave the EU next year, so things should hopefully pick up in the new year. I have some property to work on, but I'm going to wait until sort of springtime because nobody wants to start building in the middle of winter. How often do I monitor the charts? Well, I look at the charts a lot more because I'm monitoring for you. So I'm monitoring the charts nearly all day. How did you become a professional trader? What did I focus on besides being consistent? I spoke about this at the event as well, is because when I used to trade, I was sort of obsessed. I still am obsessed with trading. And to become the best or to become good at trading, I wasn't always just worried about my wins. I was worried about my, oh no, sorry, I wasn't always just worried about my losses. I was worried about my wins as well. So when I used to have losses, a lot of people, when they have a loss, they sweep it under the carpet and they move on and they take the next trade as quick as possible so they can forget about the loss that they had. People can't sit there and just accept that you're going to have a loss. Trading is about losing. You're always going to lose. But being able to face your losses and sit there and look at them, dissect them, understand why you took the trade, what went wrong with the trade, how you could do better, that is very, very important to your trading. So that gets you, say, 80% of the way there. What gets you to that next 10-20% is every time you have a win. Don't just sit back and think, I'm great, I just had a 200 pip trade and show it off on Instagram. Sit back, dissect it, and look at the winning trade. Think, okay, this was good, but how could it have been better? How could my entry have been better? Could I have had a bit more patience and entered a little bit higher? So monitor your winning trades as well as your losing trades and always try and better yourself all the time. Always keep trying to look for more information, more education, research and fundamentals, understanding the market and being obsessed with it. Don't be lazy. Currently hitting 5 to 10% each month, but to become a professional trader, what should I be hitting? 5 to 10% is great. Your money in the bank isn't making any money. 5 to 10% on any account is quite good. You can have more some months, But if you can consistently do that, month in, month out, then yeah, then you can be a professional trader. If you can, I mentioned this again at the event. If you can show somebody that you can make 5 to 10% every single month for 6 months minimum to a year, and you can take that track record to somebody and show somebody that you can make 5 to 10% a month for a year without fail, people are going to throw money at you and say, okay, we'll trade this, trade that. So yeah, the world's your oyster if you can do the little things properly and build up that 5-10% a month. No worries, guys. Some of you liking the feedback. What currency pairs have good movements during the Asian session? Now, that's a little bit of an obvious question. Again, that's why you should always, no offense, I'm just saying that you need to, questions like that, you should know if you're trading, and it's an easy one because what part of the world, I actually mentioned this in tonight's evening call, strangely enough, which I'm going to post after this. What part of the world is alive during the Asian session? New Zealand dollar, Australian dollar, Japanese yen. That's where you want to be looking for trades in the Asian session. Just like in the UK and the London session, it's we look at the pound. Somebody said NZD JPY could be a swing. It can be. Intraday originally because it's coming into one of the last weeks before Christmas, but I will be looking at, hopefully we see some good momentum, break below the B support of that Fibonacci. We can see some good momentum, then yeah, we can look at holding that trade down. Good question, Joshua. Do you not trade double tops and double bottoms if you do not like taking trades of the candle body closes above 78%? So that is where, if the price closes above the 78%, I don't want to take a short trade just yet. If it goes above the 78%, it's going to go on to make a double top. Let it go on to make a double top. Let it show you that it's going to reject the previous resistance, and then wait. You can't just wait for it to hit. On the lower time frames, you look for some price action, see some signs that it's making a double top, and let some make, for instance, an evening star formation, then take the short and then come back down. What's your opinion on paying 5k for 3 days mentorships for new traders? Personally, I think it's a lot for new traders because it's a lot to take in 3 days. Sort of why I have the community, because for the cost of a month, what you get in a month is an amazing amount if you think about every morning, evening call, Sniper Sundays. So if you think about what 5k costs, how many months you get for 5k, it's just, there's no comparison. Also with that, someone else is saying obviously you can't get all that knowledge in 3 days. Is the reason I love the community, and I wish I had this when I was starting out, is you're being educated a little bit every day. There's a hidden gem in every morning or evening call, and just learning on the live market is so much different. It can be harder, but I can pull up a chart in the past and show you how a Fibonacci works or a trend line works, but very few people can do that on the live market as the market's moving each day. Now, I cover 10 plus pairs on a daily basis, and the analysis plays out fairly accurate on nearly 10 plus pairs every single day, whether we take a trade on them or not. But there's 10 or plus more trades given, not trades, but sort of me telling you what's going to happen on 10 pairs, and it happens. So it's being able to actually do that on a daily basis, constantly. So you can see on Sniper Sundays yesterday, look at Sniper Sundays yesterday and look at the charts today and look how many things played out. Thank you, Lucky Luciano. Thank you for the comment, because I do think that to do it live and to do it every day and show up every morning, every evening to do a live call, anyone can do it. I can look like the best trader in the world if I print off some old charts, and show you how the Fibonacci works. I can pull up any. I can look back at some old charts now and show you how trendline Fibonacci works within a couple of minutes. But showing you how it works daily, and now that I've shown you the Fibonacci, I'm going to keep showing it more and more and more over the next couple of weeks to drill it into your head. But doing it on a live basis every single day. Yeah, as I said, just look at Sniper Sundays. A good thing to do, guys, back testing, is look at Sniper Sundays, and then the following week on the Saturday, look at the previous week's Sniper Sundays, and then see how the week played out, and then think, how could you have used my analysis along with your own to take trades? What is my criteria when selecting pairs to watch on Sniper Sunday? So I've said this before. Sorry, just reading some comments. One of the main things, like I just touched on, fundamentals is massive. So you need to look at what fundamentals are coming out the week ahead. So everything I do, guys, is what I do myself. So I show you that. So on Sniper Sundays, I start with the fundamental calendar. I show you that I look at what news is coming up Monday, Tuesday, Wednesday, Thursday, Friday. If there's particular news coming out on Monday or Tuesday, say on Monday today, there was lots of Euro news. So Euro is my main trade that I'm looking out for on Monday. It played out how I was expecting, but it didn't give us the entry. But the fundamentals coming up, fundamentals move the market, like I just said. So the market's not going to move unless the fundamentals move it. So when you see the fundamentals coming up, that tells you what to look out for. So therefore, you look at that. That gives you your watch list for the week ahead. Nathan Jones, thank you. I think if you really look at the morning and evening calls in detail, there's so many little things that you just learn every day. One thing I always say is to have a notepad next to your laptop. If you're missing morning or evening calls, then you're cheating yourself, because there could be that one thing in an evening or morning call that could change your trading forever. Have a notepad next to your laptop or your desktop or whatever it is, and every morning and evening call, note down one of the little gems or one of the little things that I say, because especially the evening call is where a lot of stuff comes in. Write these down, stick them up above your monitor, like I just said earlier in the webinar. Stick these things up in front of you, print them out in big writing, print them out in front of you. Something that I've said that helps sticks, for instance, patience. Stick it in front of you and just let it stick in your mind. So every time before you take a trade, you look up and you look at these things, and it makes you think, and then you look at your chart and see, are you doing these things? Aston said his trading has blown through the roof, but yes, there is more room for improvement. Um, there's a lot more stuff to come, guys. A lot more stuff to learn from. Yeah, the trade journal and log, guys, that's coming out over Christmas. So I did tell you about that. Basically, between now and Christmas, there's lots coming for you guys. So obviously, I said there's stuff coming in 2020, but like I mentioned on Sniper Sundays, over Christmas I'll be clearing all my charts, and every single pair is going to have new levels. So we're going to have new levels on. So we're ready for the new year. We're going to hit the new year with a bang. I'm also going to have the trading log completed. So 1st of January, everyone's going to have that log in the group, and we start putting every single trade in it. You put your entry level, your exit level, every single detail, and I want everybody to use that over the next coming months, and then it calculates how much percentage we're making each month, how much profit, and so on. So all of these things are going to be ready for us ready for the new year, and given to you over the sort of Christmas period. So when we come into January 1st, we're ready to start a new year, and start with a bang. How to start learning fundamentals. Which sites to look for. There's Forex Factory is good. There's loads of different ones. Again, that just a simple search will let you know that. Picking up the newspaper, Financial Times. Read the Financial Times every day. Understand what's going on in the world. Educate yourself. You don't read the Financial Times in order to find out how to take a trade, but the news that you read is yesterday's news. But it's educating you. It's understanding what goes on in different parts of the world or other countries. As a trader, you need to have a broad horizon of what everything is. Interest rates, all the things that are on Forex Factory, like CPI, non-farm payroll. You need to know the ins and outs. So while you're looking at the charts, waiting for a setup, open up a book, open up the paper, go onto a different website and look at the fundamentals. Bloomberg, and read Bloomberg every day. There's so many outlets, guys. The internet is your friend. Google is your friend. Google is your best friend. Google everything. Okay, guys, we've actually hit an hour mark now. I'm going to wrap it up. I hope that you guys have liked this. I hope that you like the idea of the Monday meetups, so we can do this every week. Do I believe the myth, don't trade in January, or is it just bollocks? Yeah, the latter. I don't think I can swear on here because it might stop being allowed to be put up on YouTube or something. But yeah, we're trading in January. We're trading January from the off. I mentioned earlier, January was a few times in my trading career. January's been the best. I remember once when I was starting out, I made 1,000 pips in January, and that was like 2-3 years in to my trading. And yeah, January's very good. I know, but it might not be a swear word, but it might. You never know. It might stop this from being put up. Oh, I just realised what you said. Okay, guys, I think I've covered a lot tonight. You've got the news now that we're going to be doing this very, very often. So each Monday we can sit down and talk. What I'm looking forward to doing is when we do the Monday meetup, is talking about specific topics. So psychology, talking about psychology, talking about, or there's so many things in trading. We could sit here and talk all day. So that's why I want to do these Monday meetups, so we can talk about specific things and tell me what you're struggling with your trading and how I can help you. Okay, thank you guys. I'm going to log off on this now. I hope that you've enjoyed it, and yeah, I will speak to you soon. The evening call will be up shortly, and yeah, I look forward to seeing you on the next live stream. Just reading your comments, guys. Thanks for your feedback. The live webinars will be same time, 7 o'clock on Mondays. Let's have a look. NZD JPY is going into profit. I just see you guys mention that. So let's hope we see that thing dump. Okay, thank you guys. I'll speak to you soon. Evening call's coming up shortly. I'll update you